What's going on, guys and girls? Welcome back to the Falcon YouTube channel. Hope you're all doing fantastic for wherever you are tuning in the world. We thank you so much for the support. This episode is going to be a good one. We're going to be covering what are the top Forex pairs to trade, beginner, advanced stuff. I'll essentially be going through what are the most effective pairs that I found to trade through my experience. If you're a new trader coming into the market for the first time, what should you avoid? A lot of people come into the markets and they try to trade everything and they get burnt. What different instruments should you be focusing on? And some advanced techniques that I found very useful over my experience trading Forex pairs, trading commodities, indices, you name it. So I'm excited to get into this episode. And also, let us know if you enjoy the new studio. What are your thoughts on it? What would you add in? What would you take out? I'd be curious to hear your thoughts all the way through. We're nearly finished. And I know we've had a lot of feedback for that, which we really do appreciate. Once we are done, we will do a full tour explaining everything about it. Just nearly punched the Falcon head, but we'll be explaining everything about it and as to why we have things positioned in a certain way. For me, it's about the space that you're in, the environment you're in. Essentially, you're a trader, right? So if you're coming to this channel, you're coming to this channel because you're a trader, whether you want to get mindset stuff, technical psychology. At the same time, having your environment in your space, you need to be inspired going into that. So you might think, oh, so why do you need a space? Look, you just need a laptop to trade, essentially. But if you want to be effective and you want to tweak and you want to be as inspired as possible, taking pride in the environment and the space that you're in is super important. So I'm excited to share and as to why we do it. So I'm looking forward to that. And for those of you coming to the channel for the first time, make sure that you subscribe to the channel. You're always in the loop for all of the videos that we're bringing out on a regular basis, especially in the moment. You don't know what position you're in a different unit of time, that there is a video that helps you on your trading journey. So make sure that you do that. And if you're interested in learning how we trade the markets, make sure you actually check out the links in the description below with our free training, our website, all of that kind of good stuff, so you know exactly what we're about. And if you're interested in getting funded at a later stage, we've actually just revamped our pathway. So we literally have all of the pathway laid out for you, that if you come in from a very beginner, learning all the way up to advanced and funded as well. So we're super excited about that. But I'm going to jump onto the charts in just a second. We'll be going over some variations as to currency pairs, and I hope you take as many notes as possible. It's going to be valuable for you. So let's jump into the charts. Right, guys, so before we get into the charts, one quick mention. If you're just starting out in Forex, where a lot of the beginners, they go wrong is they try to add in too many different instruments. And what I mean by that is they're trying to trade gold, they're trying to trade indices, they're trying to trade a little bit of crypto, they're trading silver, copper, soybean, exotics, USD Mexican, USD SEC, Euro NOK, you name it, they're trying to trade it, scouring through all of these different time frames and go, right, I'm searching for entries, click, click, click. It's not going to give you the results that you want. So take your time with that. There's too much volatility in those different instruments. You're not going to trade gold right off the bat, you know? Even things like pound Kiwi, right? Pound New Zealand. You have to learn the personality of these pairs and realize how volatile they are or not. Some things move slower, some things move faster. Give yourself time. The biggest thing that you want to give yourself is time in the markets and experience. Way too many of you are judging yourself too early on, thinking, right, are my results not up to par? How long have you been trading? 8 months. Still so, like, relax. So early on in your journey. You've got so much more to come here, and you need time and experience in the market. So give yourself time with that. Make sure that you are doing your back testing. Make sure that you're giving yourself the opportunity to go through all these different pairs before you narrow them down. So I'm going to go through a few things with you in just a second, and I'll show you through my experience the top pairs that I think have been the most effective for myself as to why I actually trade them in the first place. So I am keen to get into that. But first up, as you can see on the right here, this is where people are going wrong. You've got DXY, Aussie CAD, Aussie Swiss, Aussie Yen, you've got some crypto in here. They're literally scouring through all different time frames. All right, what's happening on Aussie Swiss? And then going to the 15-minute, to the 5-minute chart, to the 1-minute chart, just looking everywhere, trying to find opportunities and wondering why they're getting burnt. Wonder why they keep taking these trades. Look, Aussie Kiwi, right, what's happening on here? Then they'll move on to, XRP looks interesting, or Bitcoin's moving. Right, they'll just go through everything like this. Let me know if you resonate with this, because I'm guilty of it. I used to do this. I used to literally just click, 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 and like, what's going on here, what's going on here? And you find you're not operating from a plan, you don't know what you're doing, you're just searching and you end up forcing things. And when you do that, you're trading an environment that you don't understand, a market cycle you don't understand, a pair that you don't understand, and it leads to more emotional volatility, because if something's really, really choppy by nature, which I'll get into, then naturally you're going to be forcing trades that don't even exist. Just remove it. You don't actually need all of the pairs on your watch list. Less is more. And for those of you just starting out as well, if you're starting out, don't stay on a demo account for too long. I started originally in 2008 on a £2,000 account. That was in stocks, yes. However, demo wasn't really promoted as much. Nowadays, demo is promoted because they want you on their platform, and then it's a numbers game. You're likely to then jump onto their platform and then deposit some capital. We won't go into that, but you understand what I mean. Demo accounts are available everywhere, but the reality is you want to build emotional stability, even if it's in a small amount. It doesn't matter if it's just £1,000. Now, I understand, work with what you've got. Wherever you are in your journey, even if it's smaller than that, work with what you've got. But when you take it more serious, it's normally because you have real money on the table, and then you scale from there. So don't stay on a demo account for too long. You might want to test something on a demo or a small amount, but get real emotions involved so you take it serious and you do the right thing. If you just had demo or you had a small amount that you don't really care about, it's easy for you to just test out ideas and go, right, that's not really in my plan, but it looks like pound yen is going to go up, or it looks like pound yen is going to sell off. Let me try this type of entry. And then you'll go back through your trades and think, oh, I took 10 trades and 4 of them weren't in my plan. Well, why weren't they in your plan? You're less likely to just take these random trades or ones that don't even exist or invalid trades if you're taking it seriously. So get some real skin in the game. So as you can see here on the right, so don't make the mistake of just like kind of flicking through all these pairs, searching for opportunities that probably don't exist. So narrow it down. So what I want to go to now is show you here. So these are my top pairs, which I'll go through as to why in a second. And remember, me showing you my top pairs doesn't mean that you have to go and trade every single one of these pairs and it's going to make you successful. I'm going to explain as to why I like these ones, and I do add a few different variations. But let's go up here first. So see, we have Euro Swiss, Kiwi Swiss, Dollar Mexicano, we have Dollar SEK, we have Euro NOK. Now these are a little bit different, you've got some exotics. So if we start off in Euro Swiss, we go to the weekly chart and we just get everything off and just look at it. Just look at its nature, all right? Look at that price action. Just kind of move sideways. Look for the period of time, it's just literally moving sideways. And then look at this price action, right? It's not the cleanest. So if you're just searching for trades on lower time frames, you're working your way down and you're trading something like this with a strategy, you might think, right, oh, my results are not doing that well. Well, it might not be anything to do with your strategy. You're just trading an ugly pair like this, right? If you started applying on the lower time frames to that cycle, what's the chances that you're going to be taking lots of horrible trades with a lack of commitment? Probably quite high. Now, of course, we had the depegging, and then you move on just naturally by nature, even just looking at it. There's a few patterns here and there that it responds to, but just overall, it's just very, very corrective. It's just very, very choppy. So I'm not going to search for trades on Euro Swiss unless it's in a super valuable area, and you might not even take the trade. So you've just got to filter your way through. And the best way to see it is like this. If you're looking Euro based, for example, then rather than just looking for Euro Swiss, pair it up with a different one. Look at Euro Yen, look at Euro CAD, look at a few different instruments that have a better nature. It's good to test all these things just for you to have a broad understanding of the market. Keep learning, always be teachable. But the goal is to narrow all of those pairs down that you can focus on a top 6, a top 3, just something narrowed down for the week. Now you might be thinking, could I just focus on one pair? You could, and I'm sure some people have done it and focused on 1 or 2 things, but that comes at a later stage once you have experience. But even then, every single currency pair instrument will go through a cycle where it won't be that great. So to just focus on one thing, you're increasing your chance of having large periods of drawdown, because how are you going to predict ahead of time that it's going to go through a very just sideways choppy cycle? You might think, oh, I've got a strategy for that. Of course, maybe, but for most people, they don't. And this is why you need variation. So Euro Swiss, if we get Euro Swiss up with, let's say, we'll get Kiwi Swiss on there as well. We go weekly, yeah, weekly. Go weekly on here as well. As you can see, just moving sideways. Same thing, very, very choppy. And then we look at the nature of Kiwi Swiss. So I don't really trade Kiwi Swiss either, unless it's in a valuable area. We actually looked at it recently, but more often than not, you're going to see Kiwi Swiss on my watch list once a year, twice a year maximum. So you can see, look, all of this time frame just moving sideways, very, very choppy. And then when you go to the lower time frames, it's the same thing. Just literally choppy price action and just very, very corrective. So within here as well, if you're too zoomed in, you're just trying to trade in here. Now you might have some short-term moves that you take, fair enough if you found a way to do that. But for the majority of these pairs, ask yourself this question: why would you limit yourself to pairs that are just more difficult to trade, that you just don't need to? And you have to have a different type of strategy to dealing with these things. So when it comes to predominantly Swiss pairs, and this is more aimed at for beginners if you're new, because you might just be thinking, well, Mark, surely if I have a strategy, I can just apply it to any currency pair. In theory, you can, but in the reality of things, see all these different currency pairs as almost they have their own personality. And it's your job as a trader to figure out, right, how do they move? How do they flow? How can I actually connect my strategy to that and then narrow down to the key pairs that are going to do well for me? So this, structurally, is going to follow structure, but it's not something I want to be involved in or trade because it's just going to give messy entries. Then I work my way down to something like dollar Mexican. Let's go to the weekly. Right, so if we go to the weekly on dollar Mexican, then we go to the monthly. Now, this particular pair actually moves quite well, but you have to understand what comes with them. If you're going to trade things like USD SEK, Euro NOK, dollar Mexican, all these different instruments, spreads are higher, it's going to be more volatile, more difficult for you to trade. Don't jump into that. There is no race. That's the one thing I want to put across. There is no race for you to master all these pairs. But if I start working my way down, I can look at it and go, right, let's actually see the structure. How does it respond? I can already see from within my strategy, without getting into the lower time frames, that it does respond exactly how I would like to trade it. Go to the 4-hour chart. I can see the patterns. It's not the cleanest in the world, but I can still apply what I want, and it's why I would still look for it. And I can work my way down with the time frames. These are the time frames, by the way. Monthly is just sometimes I look at the bigger picture, but mainly it's weekly, daily, 4-hour, 1 hour, and 15. I'm testing a few things as well. If you haven't seen our video from last week, we went over the time frames that I use in a bit more detail, so definitely go and check that video out. So that's how I would do it, guys. I'd work my way through and see, right, do I want to trade this? And then your goal should be, right, you work your way through. Imagine you've got your big master list. You're studying them, you're back testing them, you're practicing. Give yourself time in the market. And say, right, I don't really like how that responds. It doesn't really make sense. Remove. Same thing, remove. And you start to narrow things down. You don't need to be trading any kind of exotics or anything like that at the beginning. USD SEK, for example, we go to the weekly chart. We look at it from a structural point of view. It moves good. You know, there was a period of time, well, I've traded through just so many different cycles and instruments where I was literally just trading things like the DAX. I had a strategy just for the DAX alone. And then I was trading things like USD SEK, Euro SEK as well. It was ridiculous. Like on some of them, I timed them and then I got involved and they actually done well. And then a lot of the times I was just being tagged in and out. You have to have huge stop losses, but I was infatuated with the idea of trying to catch a few trades. But from a structural point of view, with USD SEK, moves well, right? So you can look at the structure, you can see how these patterns play out, right? Expanding, continuation, push down, continuation, push down, we're creating another one. We're very close to that low, so we'll probably have one more leg to the downside with the DXY as well, and then we may be moving to the upside. So again, from a structural point of view, higher time frame overview, I can see it plays out. I can literally, when we're back testing, we're going into the lower time frames, we're going through the whole thing, more of a holistic approach. But if I just look at a top-down overview, I can go to the monthly, weekly, daily, and very, very quickly from a structural point of view and see, does it respond? Does it play out? Then I'm going to the lower time frames to figure out, yes, it may respond from a structural perspective, but does it give me the type of entries that I like to take? So I'm learning the behavior and the personality. That's what you should be thinking about, learning the behavior and the personality and just the overall flow of this pair. So I would remove, you're a beginner or even to intermediate, you don't need to be trading dollar SEK. I don't even trade dollar SEK. Euro NOK, let's have a look. So Euro NOK, another one, you don't really need to be trading. Let's go to the weekly. Let's have a look at it. Right, nothing too crazy. Again, just corrective. It doesn't move in terms of structure, but very, very corrective all the way up. And then we have, of course, the big move, and it's just corrective again. So already I can see on the weekly, probably don't really want to waste my time on it. Then I go to the daily chart, have a look at it. Yeah, nothing too crazy, even just, again, just lack of commitment all the way through, just moving sideways. This is what I mean about, imagine that you spent your whole time just on Euro NOK and traded through this environment, right? All the way up until here. You're talking like 3 years of trading through that sideways environment before you get to move to the upside. It's just not worth your time. which is why just focusing on one pair, I'm just not a big fan of that. Some people have actually found a way to do it and it works for them, perfect, just not for myself. So we get rid of that and then we start to narrow them down. So now I have dollar CAD, dollar yen, euro yen, pound dollar, Aussie yen, Kiwi yen, euro dollar, and New Zealand CAD. Now I do trade some other pairs as well, but these are my most frequent, my most consistent ones that I trade. And this is through testing, trial and error, learning what works, where am I likely to get more entries, what fits my plan, what fits my strategy. That's how I work with it. Then I do an overview. Right, if we just look, this is just very quickly, by the way, just from a structural perspective, you can just go back to here and we're going quite far back. Right, double top, ascending channel, breakdown. Another great example of this, some people asked me recently is that, mass psychology, where should I be positioned in the market? What if people can see what I'm doing? What if the institutions, this and that? Listen, patterns have been around since day one. Think about it like this. You yourself, you have your own pattern, right? I'm sure you would all agree with that. You have your own pattern, how you do things. Whether you like it or not, it's hard to get out of that because you've built the habit of being that person. That's your psychology. There is human psychology in the market. These patterns consistently repeat themselves. Now, what people make the mistake of is that they take an ascending channel for an ascending channel. If you want to learn what an ascending channel is, just type it in online. You'll find that for free. That's fine. The variations that we go into, this is my own findings, this is my own testing, thousands of hours of back testing, of going through, of realizing where that works and where that doesn't. Where are people caught on the wrong side of the market? We can test it for 30 years, over 30 years now. It's the small variance of that that works. Direction is one thing. Entry, execution, management, psychology, risk management, that is a whole other ballgame that takes time and experience. But what we can see here is just a top-down overview. Weekly, typical example, catching people on the wrong side. There's the 90% rule. We achieve that. We create a very, very messy pattern there, but all in all, we get the pullback, we get the impulse down, we get the correction, we get the impulse down, we get the correction steeper, and then we go on and we just create, this is far more messy, and then we get in a corrective cycle, we move to the upside, and now we're in this phase. It's almost one piece of its own. But I've randomly gone back to all the way to here. Look how far we've got of data. Then you go into the lower time frames and you test it all the way through. So what is the chances that these patterns are not responding if they were responding here? What's changed? Nothing. People are too zoomed into short-term cycles and judging it. Simple mechanics, right? Impulse correction, continuation. Then we get a bigger cycle, very corrective move out, makes sense, move up. We was looking for sales in this area. We've now achieved that. All in all, structure consistently plays out. Where people get it wrong or they struggle to actually become consistent with it is they just don't give it time. They don't actually put in the work. They've not back tested, and no one really wants to be that honest with themselves to think, oh, did I actually put in the work? Have I actually given it my all? It's easier to just think, I'll just move on to something else because no one wants to blame themselves. The market is the market. The data is the data. It consistently plays out. Are there tougher environments? Of course, any strategy will have a tougher environment, but tough people is what gets through it. The environments will always be what they are. Like, you can't predict what cycle we're going to have, but at least you can rely on yourself that you've got a backbone to actually go through it. So you build a strong mentality of going through every type of environment. Since 2008, I've seen so many traders come and go, so many different cycles, so many next best things. What works long time all the time is focusing on something that is sustainable, something that you can stick to, not something that you infatuate over. But without going off on a tangent there, dollar CAD. So dollar CAD I really like, purely just because across the board it gives us so many entries. It's clean from a structural approach. I don't even need to really get into the lower time frames that you can see all the way through, just from a pattern play, right? Big continuation and like lower time frames, you can see them all happening here. What do? We break below, we get people caught on the wrong side again, we move up. This is just a very slow climb up. So there are entries on the way up, but I prefer to not really trade those type of moves on the way up, unless it's in an impulsive state and we're looking for a correction. These are more of those deeper pullbacks, so you have to trade it in a bit of a different way. But for myself, I prefer something a little bit different. And look how far we are into this move now. So again, what do we see? We notice very, very corrective channel here. What would we be looking at? We'll be looking for buys in this area. We may achieve this low where we just start to break out. Remember, a trend line is just a guide. Don't take this as concrete, something solid. The same way if you're seeing an area of support, right, or resistance in the market, if that's how you're trading, don't take that as gospel, as that's the only place it's going to go. You need to know the nature, the characteristics of the market. What is the possibilities that this market can do? Probable and the possible. If you haven't seen the video, actually, it's one of our older videos, the probable and the possible. That's one of the most simple concepts, yet so effective. People are always looking for the most complicated thing. It's the simple things that work. But as humans, we want something complicated to be able to justify. Trading in the zone 101. Do you feel the need to know more about the markets? Do you think that by having more knowledge about the markets, the banks, this, that, and that, it's going to make you a better trader? Most amateurs would say, yeah, surely if in theory I have more information, then I'll do better. No, that's not the reality of trading. The more you know, the more likely it is for you to actually hesitate, more likely to overanalyze, overthink, and become more of a perfectionist. You don't need to know every tick of what everything's doing. What you need to have is an edge, great risk management, get your psychology in place, and then just have a strategy and a plan that you follow. That's it. It's that simple. Don't overcomplicate it. So dollar CAD, one of my favorites. Dollar yen as well, very, very big favorite. We trade that quite consistently. But then for a period of time, give you an example, right? So structurally, can already see just scanning over, just very, very quickly, structurally it plays out. We go to the daily chart. You do have periods, however, no matter how good something is, just like this. Are there trades in here? Of course there is, there's tons of trades in here. But just know when you're in that type of environment, there's always another pair to trade that is in a better cycle. That's the way I see it. So dollar yen, another favorite, I'll kind of breeze through these. Euro yen, I used to trade euro yen almost every single week it was on watch. Then it went through a different phase. So I'll give you an example there. So here we were looking for this impulse up, correction, impulse up, correction. And then we move from an impulse, right, to a correction. And then we move up ever so slightly, more of a shorter correction. Look at the gap between those two. And this is starting to form the ascending channel. There was a 90% probability that this would sell off to the low. Right, where do we achieve? We achieve the low, but then it becomes very, very messy in here and then slowly makes its way all the way down to this low. So again, the pattern played out. It was always going to, it's just a matter of when that actually happens. Now, are they going to play out every single time? Well, maybe they have extensions, maybe they go a little bit higher, a little bit lower. It is what it is. But this is what we're looking for. But you can see the difference between when we were looking for buys here, when we were buying this, and then it started to get slower and slower, we're switching to the sell, right? And then we have a very good idea of where that's going as a top-down overview. Now you can see, look at the clear structure that we're seeing right now. What would be the ideal area? Be selling here, selling here. Can we carry on moving to the upside? Of course, but once we get confirmation, we will look to sell. Because now you can see the difference between, just move sideways, look at the difference between that price action there, which is quite range bound, here like so, not as clear, versus what we're seeing here, right? Very clear, very clear. We can decipher all the way through exactly what is happening in these areas, patterns within patterns. Most people ask me that, again, you know, what is patterns within patterns? Where can I go and find that? They're my own findings. I didn't learn it from anyone, it's what it is. You know, impulse and correction, where do you learn that? Right. Well, there's wave theory. Impulse and correction, you go and find it in Elliott Wave Principles. What I've done is I've dissected all of these patterns, the simplistic patterns, and then gone into depth with them and then figured different things out that works. So I learned that from my thousands of hours of back testing and timing the charts and timing the markets. And that's helped me develop so much. So with something like this, what it does is it helps me, and this is the point I want to make, especially if you're beginner to intermediate and you want to look to get to advanced, this helps me decipher, what do I want on watch? Do I want all those pairs that I was clicking through? Or do I want to narrow it down? And can I, in the moment, be able to look back and dissect and think, right, we're shifting into a new environment here. I may not have been trading it for a while. Now I do want to trade it because the market is showing me signs that it is in a trending environment and we're not just chopping sideways and giving volatility and terrible entries. So that takes time and experience as well. And I don't expect you to get that straight away. You have to put in the work. So again, euro yen, so dollar CAD, dollar yen, euro yen, pound dollar. I'll give you an example. For a period of time, it wasn't that great. However, when it moves, right? You just look at the simple mechanics of it, right? Impulse correction, impulse correction, impulse correction, then a big corrective channel. 90% chance we'll hit that low. We hit that low, we catch people on the wrong side, and then we move to the upside. So again, just simple things happening over and over again. It's then just the entry, right? It's just the entry, execution, management, all that type of stuff. As you can see from the top there, where are we likely to head? Well, we are likely to tag this high before we do sell off. Now, are we going to sell back to the lows again? Maybe, maybe not, who cares? We don't need to always know exactly where something's going to go. What we need is risk management in place. So this environment was beautiful for the sales that we capitalized on. Then we started to go into much deeper corrective formations, and we had the next move down. Again, it's in these environments where people get confused and where they give back a lot of profit. Some people actually do really well for a period of time, and they just give back so much profit for no reason. Sometimes actually staying out of the market will be your best bet rather than forcing trades. Aussie yen is another one. Aussie yen's very, very nice. Again, on the way down, right, very corrective, but giving clear structure all the way through. Clear structure all the way through. This one's a little bit messier, but overall, you can just see we get the structure all the way through. Bit messy here on the way up. Now we're getting more structure. So I can see the difference between the environments of when they're shifting and when they're changing. I don't want to be trading Aussie yen in that environment, but I do want to be trading Aussie yen in this type of environment and where we are now. So that is getting really interesting. I really like yen pairs. Right, Kiwi yen, another one. Right, so we're in a beautiful area right now on Kiwi yen. So what I'll do is I'll look at the structure. So we're looking for sales on Kiwi yen, moving very nicely indeed. So we're looking for sales in these areas. And some of us are already short on that to the downside, looking very nice indeed. Again, following the same structure. There are times when the market just isn't that great. I don't want to be trading this, for example. Right, if we just take a look at this bit of price action, sometimes you're going to get this bit of price structure, right? Up, down, lack of commitment. And then it starts to form deeper structure. You wait, you're patient with it. Just zoom out. Then you've got more structure. Then you can go and look at it and say, right, I can see something that plays out. Then we can look at, okay, so there is structure to it and we can see what type of entry we're going to look at. We're looking at the top-down overview, like I said in the previous video. We're looking at the bigger overview and then we're working our way down to those lower time frames. So think of it like this. If you take an ascending channel for an ascending channel, they're perfect, simple, right? I just taught you right now, ascending channel, really, really simple. Right, you just get a channel like so, there you go. Now go and make money. There's the question, isn't it? A channel is a channel. Now, how do you deal with the variations? How do you deal with the market when it doesn't quite break the high and it gets close, but it still sells off? Where's your entry on the lower time frame? Where is your target? Where are you within structure? What type of channel is it? What sections does it have within it? So you go granular and deeper, and then you have a high understanding of how these patterns respond. Then you take an ascending channel, you compare it to another ascending channel. One is terrible, and one has all of the ingredients that gives you an edge and high probability for that to play out, give you the best possible chance to succeed. So that's how we do it. So that's just more of an insight, because people asked us, right, if I'm trading an ascending channel, then I can see that channel. Of course you can. Well, just put your stop there and put your entry there. If it was that simple, everyone would do it. There's variations, there's levels to this game when it comes to patterns. Then we go euro dollar. Euro dollar is a very frequent one that I trade. And then we go to the weekly chart. We look at the bigger picture. Of course, we're using things like the DXY for the correlation as well. Naturally, you'll see if DXY is going down, euro dollar going up. And we're seeing if we've got that one last leg to the upside for that to break the high, catch people on the wrong side there. The mass psychology, we need that liquidity. And then the move to the downside. So we'll keep that on watch. Daily chart, as you can see, looks like we're going to get that one more move. Again, this is the type of environment that we look at, and we've got structure to it. We can see, right, we're either going to be selling off early here, or we do have the potential for one more wave to the upside. Now we've got some clarity, we've got some clear structure that we can focus on. In different environments, maybe it's not that great, and then we learn to stay away from it and say, right now, that's not looking great, but do I need to force trades on euro dollar? No, I don't. I can move on to something else. Maybe New Zealand CAD has some decent structure. New Zealand CAD is actually one of my favorites. The one thing you need to learn about New Zealand CAD though as well was that its nature, its characteristics, its whole nature of the market can be very, very corrective. But when it's good, it's really good. It's a bit like Euro Sterling, right? When it's good, it's really good. It can be, Euro Sterling can just range for so many years. But when it's good, it's really good. But when it's terrible, it's really terrible. So you have to know these things, and that only comes with time. So we're looking, again, let's go to the monthly on this one. Just a bit of a tip here. So on Kiwi CAD, we're looking for the potential of KiwiCAD to come all the way back down to these lows. We was looking at that before on the weekly. Let's go back. So here, typical structure. There's a lot happening here versus just going, right, that's a double top. Of course that's a double top, but what are the variations within? How did it get to that double top? What are the patterns within there? How are you going to enter? How are you going to execute? How are you going to scale in? Where's your target? How are you going to manage all of this? Right, so hit the low again, mass psychology, get people caught on the wrong side, moves to the upside a bit, get some even further on the wrong side before we start this new environment. And we can see this new environment now, and we've been looking for sales from the top to the downside. So now we go to the daily chart. So as you can see, I know I'm moving through this and it almost looks too simple. Simple is good. It's like, right, how do you achieve success? Right, I've got a journal here, 5 daily goals. Oh, surely it's not that simple if everyone could do it. Well, people don't do it. People don't write down 5 daily goals and actually stick to their word and do it. They will do some intensity here and there, and then they'll just float around or waste time and just go through the motions. So success in life is not, it's not different to trading. You don't become a successful trader and then not a successful person. Like, you have to become a successful person. You have to be a consistent person in all areas of life if you're seeking consistency in the market. If you're new, there is no way you should be flicking through all these pairs. These are my top pairs. They might not be your top pairs. You might say, oh, I'm not a fan of New Zealand CAD. I don't like it. Fair enough. Find what works for you. That's the whole point. We're giving you the pathway, especially at Falcon. If you want to learn how to trade, if you want to learn how to trade how we're trading the markets, and you want to be funded at a later stage, and you want to come on board in that pathway, we have the whole pathway laid out for you every step of the way now, which we're incredibly proud of and excited about. So to summarize this all, make sure that if you're just jumping into the markets for the first time and you're a beginner, you're new, you want to put in the work. Don't shortcut it. There are no shortcuts to success. And then eventually you want to get to a stage where you've narrowed those down, so you're not just, like I did at the beginning, flicking through all those pairs. Less is more. And as you work your way up, eventually you'll find just what resonates with you, what works with you. You'll naturally get a flow of the market. That takes time and experience as well, and you can't rush that. You can't rush experience, which is why, again, getting mentored, you can speed up that pathway. You're not here to learn what a bull flag is from me. You're getting my experience and my knowledge through all of these different environments and how to apply that, whether it be psychology or technicals. There's so much more to that. But if you're just starting off wondering what are the best Forex pairs to trade, I would start off with the majors, right? Keep it simple. Don't go into all the exotics or different instruments. You don't need it. And then add those things in as you get better and better. And you might find, right, I actually like trading USD Singapore, for example. Perfect if that works at a later stage. But at the beginning, master the basics first, and then you can work your way out from that. So hope you enjoyed this episode. Again, make sure if you want to keep in the loop of all these type of videos and the more advanced stuff that we're going to be bringing out, make sure that you are subscribed to the channel. You like, you share these videos with your friends. We really do appreciate it. The channel is growing nicely, and it's all because you're showing up on a regular basis and giving us your feedback, and we're listening to that, and we're going to keep evolving with that. So thank you so much for joining us on this journey. Let me know the number one takeaway of this episode, what you found valuable. What did you actually learn? Was there any eye-opening moments where you thought, do you know what, I resonate with that? That's what I'm doing. Because the more feedback we get, the more we can actually tailor that content into improving your trading journey. Enjoy your weekend, everyone. Thank you so much for tuning in, and I will catch you in the next episode. Take care, guys.